What's going on, everybody? It's Kevin here from Stock Hours, and today I'm going to be bringing you guys a video on the top 5 trading rules that you can implement into your trading that can help bring you profitability in 2025. Without further ado, let's get right into the video. Alright, so the first rule I have for you guys is to only trade A+ setups only. Now, A+ setups are subjective to each individual trader, so it ultimately depends on you and what is defined as A+ to you. Now, the way you can identify what your A+ setups are is if you're a newer beginner trader and you've taken place roughly over 100 trades in the past year or so, go back and analyze the historical data and just take a look and examine what setups are you good at executing at and what setups are you horrible at executing at. All right, once you find that fine line difference between what you're good at doing and then what you're bad at doing, all you have to do now is focus on what you're doing good and eliminate the rest, right? So once you can identify that, focus strictly only on the A+ setups. Now, let's just say you had 4 to 5 setups that were A+ pre-planned from last night, and you come into the new morning and all those setups are close off the open. Now, your job here is to filter out those setups to the top 2 to 3 favorite setups on your watch list. Now, the reasoning why you want to filter it out is because you guys don't want to be having 4 to 5 stocks ready off the open, and then when market open bell hits, everything is getting close to your level, and now you're just in analysis paralysis, and now you're basically just hesitating to execute. And that definitely sucks, right? Because when you have a bunch of setups like that just lined up in front of your face and they're just all in front of you, it can be extremely overwhelming to you as a trader. And reducing the amount of setups that you want to focus on per day is going to help you be more stabilized, and it's going to keep you calm, collected, and focused, right? Instead of having to scramble around from this stock to this stock to this stock, and it's just a whole roller coaster of emotions, right? So that's not something you want to do. So always stick to trading the A+ setups only, and then filter it out to 2 to 3 setups maximum per day, and strictly trade those setups only. Now, the second rule I have for you guys is to always use a 10% stop loss. When we're trading breakouts, specifically in options, it's fairly easy for us to risk 10% to make 10% on any given breakout trade, right? And so having that system of a one-to-one system, all you guys have to do as beginner traders is at least maintain a 50% win rate, or at least try to do that, right? Your goal as a new trader shouldn't be to make money in your first year. Your goal as a beginner trader is to remain break even for your first year, identify all the mistakes during that year, and then into the next year, eliminate all those mistakes, and then that year should be your profitable year. And that's how most traders should proceed with learning how to trade and all that good stuff. Now, the third rule I have for you guys is 2 losses in a row and you're done for the day. Now, the reason being for this is because, for example, like we said, if you had 2 to 3 A+ setups aligned most days during the week, so Monday to Friday, you have 2 to 3 setups at each and every single day, then, for example, if you're risking 10% to make 10% for a dollar number, is just for example, it's $100, right? So you lose $100 to make $100 is basically what I'm trying to say, right? And let's just say on Monday you have 2 green trades in a row, and 2 of those trades were both 10%, right? So basically you're up $200 for the day. Now, let's just say Wednesday comes along and there's only one trade that you can take, right? So that's another $100 in your pocket, right? So on the week, you're up $300, okay? Now, going into Wednesday, if you happen to take 2 losses on the day, you're basically going to be down 200, all right? And why this is so important to filter it out to maximum 2 losses a day is because you made 200 on Monday, you made 100 on Tuesday, which puts you at 300, and then on Wednesday, you lose 200, right? So 300 minus 200 is still 100. So you're still capable of being green on the week, right? And that's why risk management is so important, because you need to be able to learn to keep your money and not lose your money. It's very easy to make money within the markets, but it's very difficult to keep it. And that's why most traders fail at trading. because they don't know how to protect their wins. All right, now going on to number 4. This one's also super important. You're going to want to keep track of a journal. All right, and the reason why you guys are going to want a journal is because you guys are going to want to write out a pre-market plan every single morning, just like I have here. It's basically going to consist of your stock, then the level you're looking at for the breakout, your profit target, whether it's 10% or a key level on the chart, whatever it is. You're going to write down the setup. You're also going to want to list your stop loss as well. And then the two most important parts of your pre-market plan should be the things that you like about the setup and then the things that you don't like about the setup. Now, why this is important is because while we're trading, we already have so many decisions to make during the day. If we can eliminate half of the decision making by writing down the things that we like about the trade and the things we don't like about the trade, when certain bad things happen during the occurrence of the trade, it requires less thinking to decide if you want to cut your loss early here or cut your winner early here or just sell for break even, things of that nature. And that's why that is so important. Also, the second reason why having a journal is important is every single day, you're going to want to track what trades you took, what was your position size on each trade, did you follow your stop losses, did you not follow your stop losses, did you follow the plan, did you overtrade, did you revenge trade, things like that, and just keep a general journal of the things that you do on a day-to-day basis in your trading. You can't grow in this business if you have no data collection. Think of trading as a statistics course or something like that, right? If you have no data, you have nothing to work with, right? And if you have nothing to work with, you can't really improve on anything, right? So it's very important that you guys keep a journal, log your setups, log your pre-market plan, and then every single day, come back and review and see what it is that you can improve on or the things that you did good on, right? If you can do that, you will advance as a trader. I promise you that, right? Which leads me to the last rule, which is an extremely important rule when we're trading here in stock hours, right? And it kind of goes back to the third one, but honestly, this one's just really important. And that is be careful when you double dip. All right. Now, what does double dipping mean? Double dipping is basically, for example, I have 250 puts on Tesla, and that's a level I'm looking at, right? Let's just say I try it one time during the day, I lose 10% on it, right? And let's just say I try it again, and I lose another 10% on it. That is called a double dip, right? And the main reason why you guys want to be careful about these double dips is that you don't want to fall too in love with a particular setup, because this can directly interrupt with the third rule, which is 2 losses maximum a day, right? For example, if you're so in love with the setup, right, it's a consolidation break, there's a trend line break, it's a whole number, the stock had a catalyst behind it, it can give you every single reason to take the trade, right? But somehow the market can always prove you wrong, all right? So with that being said, you really need to make sure that you don't double dip too often, unless the only times that you really want to double dip is if you like the second try more than the first try. That's the only time you can ever really double dip on a certain setup, right? Because what will happen here is if you fall way too in love with a setup and you're basically expecting it to pay you big instead of, losing on it multiple times, then your expectations are going to be, for example, I'm going to use $100 per trade once again, right? You're going to lose 10% on the first try. That's $100, right? Then you lose on the second one, that's $200, and you still think the setup looks good the third time and the fourth time, and you get stopped out on all 4, you're essentially down $400 on the week, which basically just eliminated 2 decent trading days for you guys. And you don't want to deal with that because it's going to be super irritating for you to go from consistently building small profits and then just losing it all, right? We don't want that to happen. All right, so make sure you guys stay away from double dipping and then also follow the 2 losses max per day rule, as that's really going to keep your risk management in check. All right. I hope you guys enjoyed this video. Make sure to like, comment, and subscribe to the Stock Hours YouTube channel, and I'll see you guys in the next one. Peace.